Yes, the underlying indices, the S&P 500 and the Nasdaq 100, are widely considered some of the best possible options for long-term investment. However, the way you buy them on eToro is incredibly important. If you click the wrong button, eToro will charge you hidden daily fees that will destroy your long-term profits. Here is exactly what you need to know about the investments themselves and how to buy them correctly on eToro. 1. Are S&P 500 and Nasdaq 100 good for the long term? Yes, they are generally fantastic for holding over 5, 10, or 20 plus years. S&P 500. This index tracks the 500 largest publicly traded companies in the US: Apple, Microsoft, Amazon, J&J, Visa, etc. It provides instant, broad diversification across all sectors of the US economy. Historically, it has returned an average of about 10% per year over the long run, before inflation. Legendary investor Warren Buffett often recommends it as the best investment for most people. Nasdaq 100. This index tracks 100 of the largest non-financial companies on the Nasdaq exchange. It is heavily weighted toward technology. Historically, it has delivered higher growth than the S&P 500, but it is also much more volatile. It is great for long-term wealth building, provided you can stomach the larger dips. 2. The eToro trap. Do not buy SPX 500 or NSDQ 100 directly. If you search for SPX 500 or NSDQ 100 on eToro, you will find instruments listed under the indices category. Do not buy these for a long-term hold. When you trade indices directly on eToro, you are buying a CFD, contract for difference. eToro charges overnight fees on CFD positions. Every single night, eToro will deduct a small fee from your account, and on weekends, they charge a triple fee. Over the course of a 10-year investment, these daily fees will completely eat away your profits. CFDs are meant for short-term day trading, not long-term investing. 3. How to invest in them correctly on eToro. To hold these indices long-term without paying overnight fees, you need to buy ETFs, exchange-traded funds, that track these indices. Here is what you should search for in the eToro search bar instead. For S&P 500, search for the ticker VOO, Vanguard S&P 500 ETF, or SPY, Spider S&P 500 ETF. For Nasdaq 100, search for the ticker QQQ, Invesco QQQ Trust. The golden rule to avoid fees. When you click Buy on VOO, SPY, or QQQ, look at the trade window. Make sure that leverage is set to X1. When you buy an ETF with X1 leverage, meaning no borrowed money, eToro buys the underlying asset in your name. It will say you are buying the underlying asset at the bottom of the window. This incurs zero overnight fees, meaning you can hold it safely for decades. Summary. Are they good for the long term? Yes, absolutely. Should you buy SPX 500 on eToro? No, you will be destroyed by CFD overnight fees. What should you buy instead? Buy ETFs like VOO for S&P 500 and QQQ for Nasdaq 100 with X1 leverage. Note, eToro does charge a small, flat US $2 commission on stock and ETF trades in certain regions, like the UK, as well as currency conversion fees if you deposit GBP. But these are one-off fees and are completely fine for long-term buy-and-hold investors. Also, remember that all investing carries risk, and past performance does not guarantee future results.